Today is Monday, October 3rd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials today, Alan, stock futures are up this morning. Why?
So there are some really good gains today, and it does appear that I think the primary reason is we're starting to see Treasury yields coming off. Also, there's growing pressure on the Fed to possibly accept a 3 to 4% inflation target rather than the Fed's stated 2% target. Also, there are some strains on the international banking system that argues for a less hawkish Fed, and in fact, a less hawkish environment for all of the major central banks.
And what are the most important economic reports that analysts and traders will be watching this week?
Okay, by far, it's going to be the employment situation that comes out on Friday. That'll be a 7:30 Central Time report. Non-farm payrolls are expected to be up 250,000. That would be less than the previous month. Private payrolls guessed at up 280,000, and the unemployment rate estimated to be unchanged at 3.7%.
Alan, you mentioned the central banks in the world and how they could potentially put some pressure back on our Fed. So my last question for you has to do with the interest rates and the world's central banks. Will central banks continue to raise interest rates this year?
Yes, they will. Those that are hawkish will continue to raise. Of course, not the Bank of Japan. They'll keep their easy policy intact. But those central banks that are tightening and are threatening to continue so will probably tighten at a less aggressive pace. Keep in mind that we had this financial markets turmoil in the currencies with the pound coming under quite a bit of pressure last week. Of course, it did recover. Also, we have reports of a large Swiss bank potentially having some financial problems. So there are reasons for central banks to take note, maybe be a bit less hawkish for the rest of this year. And this is already starting to show up in the probabilities of just how aggressive the Fed might be at the November 2nd meeting. Right now, the probability of the Fed hiking rates by 75 basis points is now down to about 58%, with the rest at 50 basis points. But it was just last week that the probability of 75 basis points was as high as 68 or 70%. So we're already seeing indications in the financial markets that the Fed may be a bit less hawkish going forward.
Thank you, Alan. Steve, looking at the grain markets, wheat futures did trade over resistance last week. Why, and do you think this trend will continue in the wheat?
I think there's three reasons. Number one, the USDA came out and lowered the 2022 U.S. wheat crop more than expected, which puts the carryout down. Number two, there's dryness that continues across the southern plains, parts of Argentina, and also in central China. And then I think that the export corridor in Ukraine may be shut down by the Russians. And we have a lot of uncertainty going on in Russia. I think it's going to be tough. Today we tested $10 in Kansas City December week. It may be tough to follow through at that level with the fund still concerned about inflation and recession. So I think that the wheat market is close to a top temporarily.
Steve, looking at the soybeans, on the other hand, they fell sharply on Friday. What can you tell us about this market right now?
Well, the market was surprised that the USDA raised the 2021 soybean crop, which raised the carryout. And we still have concern about China buying as much beans import than the USDA is saying because of COVID restrictions and a slowing economy. Plus, South America looks like they could have a record soybean crop. They could plant 105 million acres of beans this year. We plant 87. So they're talking about a record crop, and the weather should be okay for Brazil. All of this contributed to the steep sell-off. We may not have a lot of follow-through until we get into our harvest because cash is so strong. but I think that the overall trend should be still a little bit lower for the beans.
Finally, Steve, the corn market appears to be near a key resistance area. What's next for the corn market?
Well, the USDA dropped the 2021 corn crop unexpectedly, which dropped the September 1 stocks way below the average trade guess, and I think the market had to adjust to that. Corn market in general, I doubt if it has enough momentum to trade over $7 without something happening in South American weather. Our exports are only 50% of what they were last year, so I think the corn market could be in like a $6.40, $7 range into the end of the year. And then after that, we'll have to start trading South American weather. But overall, the money flow does not come into the grain markets from the long side, and they're not willing to buy it unless there's a problem either in South America or something in Ukraine that stops the Black Sea exports.
Thank you both. Remember, the views and opinions expressed today in this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.